Good morning, everyone. It is the 17th of November, 2022, 10:37 a.m. New York time on a Thursday morning. I'm back in the office full time now, and I'm going to go ahead with my morning Dow Jones analysis. It is not financial advice, just my opinion on the market. We did have news this morning. We had the Philly Fed Manufacturing Index release at 8:30 a.m. Just to quickly show you what that is. It is a report from the Federal Reserve Bank of Philadelphia, which questions manufacturers on general business conditions. So they're asking manufacturers questions about what their inventory looks like, what their orders look like, and then doing a survey on that and giving a basic report out to show us what is happening in the economy. So that's what came out at 8:30 a.m. this morning. Now, if we go to our analysis, here we're on the daily. Okay, daily time frame. We always start with the daily top-down analysis. Daily, a quick squeeze at the 4-hour, 1 hour, and then the 1 minute river. Okay, so our top-down bird's eye view analysis. We can see we've been following this bear trend channel here on the Dow Jones Industrial Average Index. I've been pretty much doing this with everyone since the 10th of January. I moved onto the Dow Jones Index around May. So I've covered this amount of time in my coaching. I used to trade the British pound when I lived in Australia here, and that kind of hung on with me a little bit. But I moved over to the US30. I think it was earlier, actually, around March. Anyway, the entire time I've been trading the US30, it has been a bearish downtrend, okay, as opposed to this very bullish uptrend action, which would have been very fun to trade from the past few years, especially after the coronavirus drop here. We had this steady uptrend, which was lovely, but then that switched to a downtrend, and we've been following the recessionary action in the US economy very closely for the past year. So January 6.1, April 25th, 0.2, August 22nd-ish, August 18th, around that area, was 0.3. These are the tops of the recessionary bear trend that we've been looking at on the US30. So 1, 2, 3, 4. The fourth one was here, okay, on the 7th of November, and it got smashed through there on the 10th of November. The inflation report on Thursday last week was when we smashed through. And you can see the change in behavior right now if you look closely at what we're seeing right here. Of course, if this collapses down here like this, we'd be getting what would be closer to this kind of action. But every single time I've hit one of these points, okay, these points are drawn from us lining them up. Okay, so once these two are formed, the third one forms. Okay, and then we're expecting the fourth one to form, and it clearly has not. And what has happened is we've now had to push above that sliding resistance, okay, of the supply zone here, and it's holding above that level, so it's bullish. Okay, that means that there's upside push on the daily time frame right now that's outside of this channel, this shape. Okay, so we're not having this run to the downside, this collapse of the market, and it's showing strength right now. And it's interesting to see. This could be the push back out, and we could really have upside action like this over the next few weeks into the new year, which would be interesting to see if we have a resumption of the US economy uptrend. But everything right now points to bearishness. That's a daily time frame. Still here, still holding. What I'm really looking for is just a collapse like this to bring us back into the bear channel. But I dare say we're going to have some channeling action between here, between 32,500 and 3400 over the next few weeks coming to Christmas, before a decision is made on the direction that we're going to go in. I wouldn't be surprised with more downtrend action. I mean, we still are in a bear trend. We still are going to the downside. That's a daily analysis, a bit longer this morning, but I just want to, it's significant right now how we're holding above this area here, and 0.4 has been rejected or pushed through there on the 10th of November last week. 4-hour time frame, closer. I zoom in here, we see we're sitting on top of this sliding resistance level. 33,500 has been punctured to the downside, okay, and we do have some downtrending action happening on the 4-hour. We've had a drip outside of this channel that's been holding. There's one point here. If we look at these points on small time frame, on the 4-hour, for this intraday trend or intra-week trend, 0.1 there, 0.2, okay, 0.3, same as we were doing on the other trend, the bear trend, and then 0.4, which would be here, seems to have been invalidated. Okay, I would have expected it to have bounced out of this area here, but it's fallen down below. We've had some bearish action, and probably the most bearishness I've seen, since this channel began around the 7th of October. It's been climbing to the upside, and then we've had this drip out. So these are the points here. I put when it's a downtrend or a bear trend, I put the points above on the sliding resistance. Here, when it's an uptrend, I put the points on the sliding support, because the break of structure is, we look at the break of structure when we look at the holding level. So here it's a higher low, higher low, higher low. So these are higher lows. It's a higher low, higher low, higher low, and then we're waiting for that higher low to break, okay, into a lower low. That's what we want to see for a break of structure, from an uptrend to a downtrend. Downtrend to an uptrend is the opposite. Okay, so right now we're sort of seeing this kind of action happening. Okay, and on the 4-hour it looks slightly bearish. It's climbed, leveled out a bit, and then the ball seems to be coming down the mountain. So that's a 4-hour time frame. Quick look at that. It didn't quite reach 34,500. It still could push out, but it definitely doesn't. It's run out of that steam that I could feel. There was this constant pushing to the upside, and it just seems to have pitter-pattered out, and it's coming off the mountaintop there. I would love you to understand what I'm saying when I say that, and get a feel for that, because it's just different to all this price action we've been having here. Okay, unless we get a strong burst out towards 34,500 over the next few days, this could very well be the beginning of the top forming. 1 hour, another drop out of this area here. We have these points on the 1 hour, right? Had one touch there, 2 touches, 3 touches, 4 touches. Okay, and then that collapse through. 1, 2, 3, 4. The collapse through. Okay, ranging motion here between 3,400 and 33,500. Just to remove all of this stuff that's been there. These are the possible directions of price. We've had a drip collapse out of this area here. So, unless we see a big push up here, I wouldn't be surprised if we saw that and then the collapse. Okay, we normally have even a dip up here into 34,500, then the collapse down. That's kind of like what the pattern I generally see. Sorry, let me get this wrong. The pattern I generally see with a topping action. However, it seems like the fall down the mountain has begun, so it could very well just continue from around this area here. If we make this 33,500 here, the new supply zone again for now, right? I would highly recommend everybody do this on their own charts. Chart yourself. You can't. You need to be able to see what is happening yourself. You can't just rely on this this every day. You've got to think for yourselves here. Some days if I do an analysis late, it's a great opportunity to go ahead and do the charting yourself. I will be updating the course over this weekend, show you exactly how you should be doing everything to the book. I'm excited to do that, but yeah, make sure you're doing all of this on your own chart. I'm just giving you a guide of how I'm seeing things, but you need to be thinking for yourself here. Okay, 33,500 is now the demand zone that turned into supply, and we see here that price is just pushed back up there on the 1 hour. So a lot of imbalance here to the left. Okay, that should fill on the collapse. Okay, all the way down here, and buying, it would not be great when this imbalance fills, because it'll fill quite quickly, I presume. So that's 1 hour at the moment. 1 hour at the moment, you can see that we've got this kind of, you know, downward action occurring. Okay, this is the kind of channel at the moment. I don't want to get confusing here with what's happening with all the lines and everything, but that's the general direction of price right now, is to the downside. It could be a pullback on the 1 hour, which means it will pop out like that to the upside, and that's what we have to be cognizant of, and just to recognize what might be occurring. But right now, this has come out of this channel here, okay, and it's moving in its own direction away from this overall shape. Okay, we have this strong push to the upside, this falling out to here, and then this topping action, and now it's moving outside of that. So the channel is ending. Okay, this uptrend channel is ending. If we drag this out to here, you can see that. Okay, if you can not get confused by that. Okay, this is as if we used a large channel from here, kind of touches there, touches there, touches there, moves outside of it there, and then very strongly moves outside of it there. So we have break of structures of this overall channel occurring now as well. So these channels are drawn just to give we just put the points together to give us a general idea of what's happening. There's nothing specific about it. It's all subjective, but you know, the general idea is that this is not, the price is not holding within this. Okay, we can actually make a singular channel now, like this. Okay, get rid of this one, and you can see that this channel is now ending at the top here. So downward action is on the cards for us over the next week. Tomorrow, Friday, probably get a big drop, and then or just some more, you know, topping action, and then next week we see some downside. It's about time. It's been you know, a solid month, more than a month of uptrend, really. Yeah. So that's what it's looking like on the 1 hour. And then we go down to the 1 minute on the river here. We can look at yesterday's trades. We had this one on here that was a set and forget. If we drag that out, that would have gone against you during the London session. Our stop loss is all the way down here. I just want to demonstrate how you can always get out of these trades at break even. You see, if you just waited for it to come down here, turn around, come back up, right? We could have got out of break even and a bit of profit just before, but if your trade goes against you, you could have got out of break even back there after this fall during London. So, you know, twice you could have got out of that trade here during London. So once it came back up here, went into profit and then went against you, already seeing this price action here, I would have known that this trade wasn't working. Okay, from this kind of price action during London and the strong trend to the downside, how it's sort of falling out, like that's not indicative of mean reversion for me. The whole river is to the downside. It's kicked out of the median. It's pushing to the downside from the median. It hasn't come up, swept up like this. For it to go mean reverting, I wanted to sweep up like this, then sweep down to there, and then I'm looking to buy those areas as it comes back up. But what's happened is it's kicked straight out of the middle here during London. okay, come down and put in that volatility movement that we, if we remember when we first started learning about average wave movement, this is our average wave movement across here. So we want that kick. See, we see the kick here. It's gone over that, but then once it's kind of reached that volatility edge, it's turned around and come back up. It didn't go up first here and then come back down to this area, and that's where I would have bought. So the fact that it just dripped straight out the middle here during the London Open is indicative of downtrend, okay, not mean reversion. And so this trade that was left on during the US Open, if you did leave it on, okay, remember we take trades off just before major news releases. But if you did leave this on, it would have come back up and closed here after. So you would have had two opportunities to get out of it. Here, why we had this on is this is a major area of demand, okay, and it lined up with the river. It was there, that's right, major area of demand, okay. You've got two opportunities to get out of this. So comes up, doesn't work, goes down, comes up again, okay, back to break even. So after this moment here, if you had left it on, I would have taken it off when I saw this price action. I don't expect anyone to understand that yet unless you've been with me for a while, but I would have taken it off if I saw this price action. Okay, again, I'm looking for it to be up here first, then I'm going to buy the bottom, not coming out of the center like this from like a tiny drip feed, like a tiny volatility wave from Asia, and then a fall straight out, okay, indicative of directional movement. So if you had left it on, worst case scenario, you can get out at break even twice, okay, comes down, goes back up, falls away, goes back up. Two chances to get out of break even, plenty of chances to get out of like, negative $500 or negative $1,000 depending on your account size. So much time to get out of this trade, and that's what we have to be practicing and learning, and there's going to be a big part of that in the course, which I'm looking forward to doing in the updated course. But yeah, that's yesterday's trade. This top one obviously didn't hit ever. And if we just go back to today, Philly Fed manufacturing news, nothing really occurred at 8:30 a.m. But it concluded with a bottoming area. Okay, here, did we know, like, to me also, this signified the beginning of downtrending action. This is the first time I've seen this action. The past month is just been going up non-stop. Like, it's different to what we're seeing here slightly, okay, because it's been 2 days now. We've had sort of, this is a top, then we had a downward action, and then we've had a second downward day, okay. We look back here, we have one downward day, and then it shoots back up, okay, and every other day is up. Kind of run out of data here. Okay, you could say that this is similar. So we're not out the woods yet. The thing is though, it's different. If you look at what we've got here, we have this climb back up after this fall. So we had this climb up, fall, big fall to the downside, secondary fall, and then resumption to the upside. So we really need to see that happening. But I can already tell from what I'm looking at right now, especially where it is on the chart. I hope I'm not confusing everyone here. I'm just speaking as I think, as I go, and sometimes it's hard to articulate what I'm thinking. But what I see is flattening out at the top. Okay, mean reversion action, flattening out at the top. Okay, and then downside. Now, if this does not turn around today and go back up, or during the Asia session start feeding back up and come back up here, I would be looking to potentially begin to look at shorts or shorting direction for the Dow Jones Index. So right now it's an exciting time. We might be starting a new downtrend. Okay, and obviously for me right now, the areas of interest are here being a major area of previous demand, becoming supply. Okay, and here. For us right now, river-wise, these are the only two areas we're looking at. But it's interesting price action. Okay, interesting price action. I'm not that fond of buying at the moment. Selling looks good. Okay, we had a good sell off here. Selling up here in this area looks solid. I don't know if we're going to get enough volatility today for that, but these are the high probability zones. So here, right, is a beautiful trade if it comes in. We're going up to here, okay, and then we're taking profit between this area of what will be demand, the top here. So I'm looking for that action, okay, to trade that area, that block, and then it might keep going up, okay. That's the action I'm looking for that trade. That's a good $1,000 trade there. Okay, down here, looking at the 1 hour, there's all this imbalance. So this could just collapse anytime and it'll be fast. Okay, and we saw what happened here. It missed it, just went straight through. Okay, so that could happen again at any time. It could just go, you know, and right now, like, it's not worth a scalp. You know, we don't have an understanding of what price is really doing directional at the moment. It's no man's land. So that's really the only trade for me today. But a really interesting time at the moment. We'll see what happens tomorrow. That's the analysis for today. A bit longer today. I just wanted to go a bit deeper into the daily analysis and whatnot. But that's where I'm looking at for my trades today. That kind of action, this kind of area. You could, you know, especially if you're practicing at the moment, and not in a challenge, you know, just remember here. So this is our imbalance that we had from the inflation report. So that really down here is the area of demand. This is empty through here, technically. Okay, so if we pull this out across here, that's where we have room to collapse to. And we've been working back towards that floor. Okay. That's the area. And this could collapse too. Now, buying here right now, we have had a price sweep the river, kind of. But I would be wary with a set and forget there. If you're going to buy there, make sure that you are with it. Okay, make sure it's beneath demand, and I'd put a little scalp, as I'm looking for a little tiny bit there, just a little chunk, maybe like a $250 trade or a $100 trade to work this region, making sure that we're beneath the demand zone there. Okay, that's the bottom. Comes down, licks in, jumps up, and then continues to the downside. So that's the kind of action we're looking at. Down, like this, comes up, okay, and then down, right? That's what I'm looking at for today. Okay. Yeah, it's a weird one for me, and there's nothing very clear because right now I have a change in my bias possibly to the downside, and we've been long the whole time. So I'm just being cognizant of that and my inner feeling of what price is doing.